Shakalaka, today's video, I am joined by fan favorite Bill Noble from Token Metrics. Today's video, we're going to be discussing exactly what's going on in the rest of this 2021 bull market, plus how Evergrande factors in. And there have been some amazing updates to the Token Metrics platform in Token Metrics 2.0. We're going to be discussing exactly what those are, how those help you trade better. And if you haven't checked it out, there is a discounted link down in the description and the pinned comment. Stay tuned. Bill, it's always a pleasure to have you back. I have to say, my audience absolutely loves you. I never see as many positive comments as when you're on the channel. So I'm excited to have you back today. Welcome.
Thank you. Thanks for having me on the show.
Yeah, so we have a lot going on in cryptocurrency, and not only that, but Token Metrics has completely revamped the whole look, everything you can do with it. So we got a lot to talk about today.
Yes. Token Metrics 2.0 is exciting, and so is this market.
Yeah, definitely. So I actually saw that you posted yesterday about Ethereum with the GON levels, because last time you were on, we talked about how you draw them and how that looks really awesome. So what's going on with Ethereum from the way you see it?
All right. So there's this situation out there with Evergrande in China. Basically, they're a huge company. They have 300 billion in debt, and they've been borrowing money in the bond market to pay dividend holders in the stock market. So crypto people will be like, that sounds like a scam. And it kind of is. Okay. So everyone is assuming that, that group's going to get bailed out. And that's probably not true. So what does that mean for ETH? Well, ETH's an altcoin, and altcoins in general require a constant flow of money in just to maintain the prices. So if you kind of have a black swan in legacy, even though I love crypto, I love Ethereum long-term, I think it's going up, we may be in a situation where everyone has to get out or get forced out before it can really go up. Because think about it. How do you get something to go parabolic? Well, you got to get all the bullish people out and then up. So when I look at Evergrande, that's like the first thing that comes to mind. Hopefully it's less complicated.
Well, it makes sense, because I look at it like, we always think that we know what's going to happen with the market. Like, especially, I feel like this bull run, especially, everybody knows what's supposed to happen. Like, we're supposed to have a peak on this date. By December, it's supposed to be this high. And it's just like, since everybody knows it, the market's just waiting to like surprise everybody. And so it's very interesting as to what's going to happen, because yeah, there's a whole bunch of stuff like Evergrande. Also, the SEC getting very involved recently, like with the Celsius lawsuits and Coinbase lawsuits, and
right, the Bitcoin ETF is kind of like a dice throw as well. Approve it, not approve it. I mean, can you imagine if they don't approve the Bitcoin ETF with the government shutdown, interest rates rising, the dollar rising, and Evergrande going bankrupt? Oh my God, please.
Yeah. So, I mean, this is the big question on a lot of people's minds. So like right now, nobody really knows. Some people think the market's going up. Some people think it's going down. And everybody's kind of like biting their nails, like praying that it's going up, but really hoping it doesn't go down. Or at least maybe that's just me. I don't know. But
no, dude, that's everybody. Laying awake at night about it, dude. Trust me.
Yeah. So like the big question is, what's the safest play? Like, what's the best play? Do you just try and like take some out into cash, diversify? Like, I don't even know how to figure it out.
Okay, so this is a great question. So back in 2008, the last time we had one of these problems, everybody was looking for what was safe. And a lot of people don't know this, but nothing was safe. Like gold even went down 30%. Okay, everyone's like, oh, the world's blowing up, let's buy gold. No. So if you want to get safe, you want to get liquid, you want to have cash. Now, in the event this is not a black swan, okay, the interoperability trade, right? So that's probably like AVAX, Solana, and especially Polkadot, Ren, Kusama, right? So in other words, if this is over tomorrow, okay, That's probably the trade. Now, I think what I'm telling people is what's safe is, 50% of your portfolio that's the stuff you hodl. 50% of your portfolio, you're super cautious with, not investment advice. And here's why. So in Bitcoin, right? 20K was like the big level. Like, remember talking about, is it going to break 20K? Oh my God, will it ever break 20K back in 2018? Will we ever see that level again? Okay, 20K in my mind is back in play. 20K was never retested. What happens if there's this huge, like, oh my God, right? Like I talked about, sell in May and go away, Rectember, September, and then Rocktober. What happens if Rocktober creates a 2 or 3 day flash event down to 20? Now, I also have another theory that, the reason you keep the cash on the sideline is the other catchphrase is, maybe it's 17 to 70. In other words, Bitcoin might go way down and then everybody goes, wait a minute, this is why they invented Bitcoin in the first place. But they may have to get everybody out first. And as you noted, all right, everyone likes it tidy. Everyone's like, oh, this is the beginning of the cycle. This is the end of the cycle. Let's genuflect and it's all tidy. No, man, it's never tidy. And if crypto's ever really going to explode, they're going to shake the monkeys out of the tree first.
Yeah, another shakeout. Like, I feel like we haven't even really recovered from the first shakeout. I feel like we're still around the same levels, because the first shakeout was down to 30. What's 42 above 30, So it feels like the same levels to me. But yeah, could shake out further. And because then, I mean, if things start really shaking, then what we see potentially is like NFT prices drop. No, right. I mean, there's nobody buying NFTs. So these $1 million NFTs now, nobody will buy them. And then, yeah.
Right.
Yes. And then the real fear comes. Like, that's it, dude. I am terrified of that stuff. Cause like the 2018 bear market, that was pretty much like the stock market crash of 1929 or whatever. It went down 90%, 90+%. Like, surviving through that gives you some PTSD. And then like deep down inside, you're like, uh-oh, what if that happens again?
Okay. So this is an excellent point. So in a bull market, and believe it or not, even though I think this is going to get nasty, we're still in a bull market. There's something crypto people are not used to. Crypto people are like all the way up, all the way down. That's what they're used to. That's what they have their PTSD and their therapist for. Okay. But what they're not used to is something you see in more evolved markets, which are these wild consolidations, right? At 64K, it's euphoria. At 29K, it's the end of the world. At 45K, oh, here we go, bull market again. Oh no, 20K, end of the world. I'm rage quitting crypto. And then 70K, right? These wild consolidations in boxes or triangles are actually super common throughout legacy markets. And crypto is more evolved. So all this stuff like, January rally, sell in May and go away, Rectember, this comes from like the stock market almanac that was way, way back. So crypto is experiencing all these new things. And I think this wild range is like the next thing, but you don't want to get chopped up, right? So, on a day trading basis, like yesterday was the end of the world. Today it's all the way to the moon, right? Back and forth, back and forth. That's what happened in 08, right? You go back day to day, right? And then overall, you also don't want to get cut to pieces or rage quit crypto right before it turns around and we discover why Satoshi invented it to begin with, which is a legacy debacle. I mean, people are quitting the Fed, Randall. They're quitting the Fed. I think they've got Jay Powell buying municipal bonds that he knew the Fed was going to bail out. That's just a rumor, right? 2 guys quit the Fed in one day. That's never happened. They're jumping ship from the Fed. Okay. Yeah. So somebody may discover along the way here why they invented crypto in the first place. But what we want to do for crypto love listeners and viewers, I love you guys. I want to make sure that you're protected so you can take advantage of this if it happens.
Yeah, got to hold on for dear life sometimes. Now I noticed you mentioned like a $20,000 retest, and I was looking at the charts the other day, and like the 200 weekly moving average is I think around $17,000. So it's like right up towards that area where that's the lows where Bitcoin generally almost never dips below. So bouncing off of that, as much as it may stink, it's not unreasonable.
Right. Like you just got to watch the flash crash. Right. And, Token Metrics 2.0 has an upgrade in our visual trends indicator, which uses moving average, volatility, and AI. And some of those signals are starting to flash negative. Right. So again, it's protect yourself. And to your point, sometimes things revert to the mean. 200 weeks, that's like, I don't know, what is that, like 4 years? So sometimes things do revert to the mean, right? And I know I was on this show. I know somebody's going to say, wait a minute, isn't this the ETH 12K guy? Goes, yeah, this is the ETH 12K guy. But remember, in that research, the dollar had to be falling sharply. And right now, the dollar's rising. That's why I'm not sleeping at night, right? Mm-hmm. Bonds are getting hammered because of inflation and the fact that we can't pass a budget, and the dollar's going up. So yeah, I still believe in ETH 12K, just in case I get called out on it. It's just that, I can't predict the black swan event. I didn't know that there was a $300 billion real estate scam in China that was going to.
Oh, you didn't see that coming?
No. Well, actually, I had one of my guys look into it. I'm like, dude, go back and find the first article of like when this really hit the tape. And the earliest thing he could find was a Wall Street Journal article from August 31st. Now, I was like, wow, that's not a lot of warning. And I was talking about Rectember because in 1929 and 1987, the tops were right after Labor Day. Sure enough, that's what happened in crypto. So I was actually a little bit caught off guard by my own research. Okay. And then one of the things that we're telling people is from that Labor Day top, kind of the whole mess lasted about 55 days. So 55 days puts us at October 29th, where I think there may be the bottom. And if you're going to trade for ETH 12K, or you're going to trade for the reason why you got into crypto to begin with, that might be the date. And for 30 days, because we just don't know, right? Like who owns the 30 billion in debt? Credit Suisse was bragging about, oh yeah, our risk management worked real well. We dumped all our evergrande debt. Who bought the debt from you?
Right.
It's out there. So don't want to babble too much, but the reason you got into crypto may surface at the end of October, and you want to be there for it.
Not only that, but Bitcoin has like a huge wedge forming. Like from the very bottom in March, I think it bounced off of there once again a few months ago, but that and the tops forming in the middle of November. So, everything's poised for a breakout up or down, but it's going to be a fun ride. My goodness.
Right. And I really hope it's up. I mean, one of the things that you got to track is this, one coin market, DYDX. Okay. This derivatives exchange. Now, it's got more volume than Coinbase. It's got more volume than Uniswap. The token is mooning. All right. But what people are forgetting is it's a derivatives exchange. And one thing in technical analysis, because you were mentioning like a wedge, it could go up, could go down, there's a huge amount of volume being traded in a relatively small space. And at a derivatives exchange, you got guys betting up and betting down. If I was a corporation and I just FOMO'd into a bunch of Bitcoin on my balance sheet, I'd be like, oh my God, we got a hedge. So the more volume they trade on DYDX, you just have to be aware that that could be people hedging. So I actually want to see volume on DYDX kind of calm down. The token's probably going to keep going up, probably not investment advice.
I just made a video on that one today. And in looking at it, there are a couple things that were kind of interesting about it. So one, a lot of the airdrop holders got like $1 million in airdrop. So they only airdropped to 15,000 people. Some of them got $1 million from it. And then not only that, but a lot of the volume is because of the rewards right now. You get paid almost like 4 times what you do for actually trading fees. Like you get paid 4 times your trading fees to trade on there. So granted, there's a lot of people using it right now, but they're very incentivized to use it. So as soon as those incentives disappear, where does it go?
Right. And that's the DYDX token. Right. And I get that. Actually, we had this DeFi genius that worked for us that actually flagged that and perp like 12 months ago, back before it was even launched as a token. Because like the future of derivatives is part of the future of crypto, as DYDX is showing. And I'm sure there's a lot of retail traders looking for the rewards, but you don't get bigger than Coinbase and Uniswap just with retail, right? Mm-hmm. Institutions are in there as well. And they're like, oh, you're going to pay me to hedge? Oh, cool. Okay. So there's a huge incentive. If there's a monetary incentive to protect yourself, you know, people are going to take advantage of that. And again, hopefully all this is wrong and everything calms down. We can buy Polkadot and ETH and go back to business. But I'd be remiss for your readers and, you know, your group, which, you know, no joke, I care about what happens to not just Token Metrics users, but your listeners as well. I'd be remiss in not bringing this up. I've got the guys who write for me combing through the history of 2008, right? Because AIG was too big to fail, and so's Evergrande. So hopefully there's a bailout somewhere for the sake of crypto.
Yeah, and one thing that I did want to touch on that you mentioned earlier was the interoperability play. So you mentioned a few altcoins there. Why particularly them, and what exactly does that play mean?
Okay, so, you know, Polkadot was originally, I don't know, I mean, it was a concept, interesting concept of Web3. We were going to connect a whole bunch of different blockchains. Well, back when Polkadot kind of first started trading, it was really kind of just ETH, right? Now there's ETH, Solana, Phantom, Avalanche, right? On and on and on. And NFTs are trading and DeFi is trading. So now there's a world to connect, right? Ren is like a shuttle bus, as I understand it, between, you know, ETH and Polkadot. You know, it's flashing on a lot of our AI portfolios on Token Metrics 2.0. So, and Ren, if you look at it on a chart, it moved from like 30 cents at the low to like $1.10. It just exploded. We liked it a year ago and we're frustrated, and now it's moving, right? Now, Polkadot had a bid. I'm hoping Polkadot holds 25, but we all know what Kusama did on the upside as a test net. So now there's a world to connect. And when it comes to Web3, I was actually talking to a reporter from a big paper, and I said, you know, Web3, and the guy goes, wait, Web3? I think I've heard of that. So this could be, you know, after Rocktober, you know, Web3 is the next big trade. And if you wanted to like jump in now on a dip, you know, these avalanches and Rens and Kusamas and dots and even maybe Tezos, right? You know, some of this stuff may be worth, you know, DCAing in, you know, towards the middle of October, not investment advice, but there's blockchains to connect now. So Polkadot's value proposition and everything in the Polkadot universe, you know, just kind of jumped up in interest and possibly value once the correction's over.
Mm-hmm. Yeah, because I noticed that you guys were talking a bit about Polkadot and also Kusama and Moon River, how they now have the parachains and the silent auctions that they have, or the candle auctions that they have there. So it's very interesting concepts they have.
Right. I mean, it's, you know, frequently people forget about trades right before they explode. Like when they come out, it's like hype, hype, hype. Then people give up, then it goes.
Mm-hmm. Definitely. Let's see, there was another thing that I wanted to ask about, but oh, yes. Okay, so here we go. So Token Metrics 2.0, complete revamp of the platform. I got to say, it looks extraordinary. And for anybody who does want to check it out, there's a discounted link down in the description and the pinned comment. And yeah, down below. And so I know like there's a whole bunch of new stuff on there. Like not only does it have the stuff that we're used to, like the TM grade, like the visual trends index, but there's like a whole bunch more stuff. There's on-chain data, there's sentiment. You can categorize things by like different ecosystems, like the Polkadot ecosystem, the Solana ecosystem. You can look at DeFi. I mean, it's like you could literally spend hours on there just browsing each different thing and then cross-referencing it with the token mesh, with the TM grade, and it's pretty awesome. So what are your favorite things on there?
Okay, what I love to do. So first of all, the TM grade has been improved, right? The grading system itself. It's now a kind of a mixture of TA and quant stuff put together with machine learning. The guy in charge of this, I call him Math Whisperer inside Token Metrics, right? He can do serious math in his head, and he has hedge fund experience. So our grading system, like when you pull up and say, hey, what are the best grades? Those are your hidden gems that you can research yourself, right? Because a lot of stuff we're finding is small cap. Now, to look at the big caps, what I do with it is I go, okay, I want to see all the layer ones, and I want to see all the big cap layer ones and what the TM grades are. And right now they're not very good. So, except maybe for Avalanche, right? I hit the button, I search it, and I'm like, okay, instant picture what's going on, layer one. Go over to DeFi, boom, same thing. I can see the small cap DeFi and what's going on there, and I can sort it out and get an instant picture of like, okay, large cap DeFi, ooh, low scores, okay, or high scores, right? Those things move above or below 80. We're finding that those are very powerful signals. And the fact that we can sort it now by sector adds more power to it. Now, speaking of sorting, sentiment analysis. So our AI guys are now reading Twitter, Reddit, and Telegram, looking for signs, okay, of positive sentiment or negative sentiment about a coin. So you don't have to go through and read all this. We're reading it for you and processing it with AI. So like, you know, I think OKB was at the top for bullish sentiment. Avalanche was below there. Avalanche hit the 21-day moving average at 60, right? And when I saw that our sentiment indicator was, you know, that was the second most bullish, I'm like, whoa, you know, I may think it's a top, but I'm not getting in front of this thing. Hell no. Now our portfolios are working better now because they're, you know, the coins that go in there are being put in there using a better grade. So our sort of antenna, our picker is better. Okay. And we had Solana, right? Solana was in our day trading index every day all the way up. So the day trading indexes are a great way to almost build a watch list. Like, what are the coins of the day? Or what are the coins of the week for our daily and weekly indices? So if you combine the ability to look at sectors, get better grades, look at an AI-based trend following system, right? And then get the coins you want to watch for the bull market, both big and small, because we do have small cap indices, right? We've just improved your ability to sort the whole universe, right? Like 6,000 coins. So if they just say, oh, we're passing the Bitcoin ETF and Evergrande's over, well, the next big play is on Token Metrics 2.0, and we'd love it if you come join us.
Absolutely. Yeah, I got to say, it's like I just spent like, I don't know, just hours fiddling around on there with the new update. So it's really awesome to be able to look at all the different categories, because like you get to see different projects that like I never saw on the older version of Token Metrics. So I really like the categories that you guys have done.
Yes. In other words, how does a one-man research band like me find the new stuff? And then there's Token Metrics 2.0, and then there's, you know, there's also the human angle, right? Don't forget, if we're going to have, you know, if we just had Rectember and Rocktober follows, okay, we've got Token Metrics, you know, research that goes out every day to sort of help you out. So not only can you use the site, we use the site, and then we use other tools to publish research. And believe me, you know, research was never more important than it can be in this environment. In 2008, when I worked for a big investment bank, nobody knew what to do. All the fundamental guys shut down. They were like, oh, I don't know what to do with this. But I was like, I was the chart guy and go, I know what to do. I can chart it. And I remember somebody saying to me back in 2008 that all I did was stare at my inbox waiting for your report to come in. So I don't think it's going to be, I'm not saying that that may repeat itself, but people need research. People need crypto love. People need token metrics when they shake the tree. Because if it's not tidy, you need to be listening to the smartest people you can. Okay. And it's my sincere hope that me and Randall are included in that group in your mind.
Yeah, absolutely. So we talked about a whole bunch of stuff. And I mean, I think the key right now is that like everybody's kind of waiting to see how this thing is going to turn out. We have a whole bunch of critical things coming up all at the same time. And it's just going to be a very interesting next few months. So what would you say the takeaways are, and maybe any advice for newer traders out there, and even for some veterans?
Okay. So portfolios, right? If you're like trying to hodl crypto, 50% hodl, 50% cash. If you're a trader, you can go back and forth on this because there's probably going to be wild intraday swings, right? Not investment advice, but if it goes up 7%, sell it. If it goes down 9%, buy it until the news hits the tape. That's probably how you trade the dots and the ETHs, right? It's like, don't FOMO in and don't get despair on the bottom. You actually probably fade it for the traders. Okay, now for newer people, the key is don't get discouraged. Everyone's going to say at the end of 2021, or they may be saying it now, oh, I didn't buy ETH at 300, so I missed that. And there was the NFT mania, and I didn't understand it. And that was all for millionaires anyway, so I missed that. And then they're going to watch the market maybe go down, and they're going to go, I give up. Don't give up on crypto, because when all the legacy gymnastics are over, whether that's tomorrow or Halloween, the opportunity to live Satoshi's vision is coming. And the key is don't get discouraged. Don't get wrecked, FOMOing in or being in despair. Just wait. Patience is a virtue, and you haven't missed it. You haven't. Okay. Because there's going to be, kind of like wash out and then melt up, in my view.
Yeah, I think that's really good advice there, because no matter what direction it goes, there's going to be those people on Twitter who are saying, I called it, I knew this happened, and yada yada yada. And you just have to like kind of be like, okay, awesome, great, you got it right once. And like the other thing is like what you're saying about it coming, because we're seeing all of the legacy people moving into cryptocurrency. Like I think it was Morgan Stanley or something doubled their exposure to GBTC in the past few months. So like we're seeing it. It's just, it takes more. In crypto, we're so used to a time frame of like a day, it takes a little bit longer than that.
Right. I mean, if it goes down, like the big players are going to be there. They're probably hedging on DYDX now, okay, so they can be protected, so they can just scoop it all up, whether it ends tomorrow or, at the end of the month. Because at the end of the day, like people quitting the Fed, Evergrande's already missed an $83 million payment, right? Crypto was invented by Satoshi. It came out in 2009 after the great financial crisis. They invented a new form of money for a reason. Why? Well, for the next great financial crisis. So regardless of what price you're able to get in on crypto, this is why crypto was invented, and the big players know it. They absolutely know it. So, and even a little bit in NFTs, I would imagine that at some point you're going to be doing videos of value investing, and we may do them too, value investing if NFTs get hammered, right? Art usually holds its value better than stocks in the legacy market. Who knows? It may be the same thing in NFTs. So the big guys are coming, right? They're coming, and they're just waiting for the best price to get in. And you don't want to be the person puking out your crypto to Morgan Stanley, right? So it's better to stay patient, let the thing play out, right? So that you're not frustrated and upset when you need to make the right decision.
Boom. Great advice, Bill. Thank you so much for joining us again. Everybody can find you on Twitter at crypto_noble.
Yes.
And then also on Token Metrics TV and a whole bunch of other places. So thank you so much for joining us. It's always been a pleasure. And we look forward to seeing you again.
All right, Randall, love coming on the show. Thanks for having me.